jumping in, build this city. It's been a busy week. Couple things we're going to have to go over and try to figure out today is existing home sales are down. Is that really a question mark? I mean, what did we really think was going to happen? And then we had the oil crash that happened a day ago. It was crazy. If anyone was in the stock market and saw that, it's probably something you would never see in a lifetime. And then we get news of some more backing from Fannie and Freddie stating that they would buy some loans. So that's another big perk, another big option to try to prop up this market, keep it going. SBA, a lot of questions around that. We'll go over that. SBA, maybe it's a comeback story. Hey, you thought the money was gone and the government took it all for themselves and hid it in one of the Virgin Islands. Well, it's coming back, and hopefully some of these small businesses will get an opportunity to use that. So I'm Mike B, part of Build This City, real estate news and new investment news in general. We're going to go over these topics at a high level and understand where we're at. Let's start with the existing home sales from NAR. A very, very interesting look at where we're at from a home sales perspective. And when we go to NAR, they have all the data posted on our website. So if you're interested, without a doubt, just jump out there. You can go look at it. I like to look at it in this format where I'm sharing my screen and you kind of see how I would look through the pages and actually view the data that would be helpful in this pandemic. Home sales dropped 8.5% in February. Much expected, right? Everyone's going, wow, that's a big drop. It is. Seasonally adjusted annual rate of 5.27 million in March. However, as we look at the data, if you're just looking at it from the 8.5 and say it's all Corona, you go back last year, it's still up 8.8% from the previous year. So existing home sales, even with the coronavirus, have still beaten out what it was the prior year. So very, very interesting. I was expecting a bigger decrease, to be honest. I would expect it to eclipse because COVID wasn't there in March of 2019. However, we may see some more action. As it's progressed. I think April probably was the worst of the hit when we started seeing the shutdowns for most of the states. And I think there's talking about late May of opening back up. So very interesting between April and mid-May to actually see what we're going to see for numbers and how it's going to play out. With that, guess what? If you think prices are going down, all the hunters are out there, all the big dogs that are trying to flip this house and get money, they're having trouble. They're having trouble because the prices are going up. $280,600. It's up 8% from March 2019. That means you had appreciation if you were to have bought a home in 2019 of 8%. Not too bad, not too shabby, okay? Again, first look, obviously this doesn't account for what happens in the cycle when there is a recession or some say a depression or even a slowdown. When the layoffs happen, if somebody does have a home, they're not kicked out the same month. There's a process. And usually the process is 6 to 9 months. So these are lagging indicators. And then when we look at some of the other stuff that the government is doing, we may not see the full output or outbrief of this pain till maybe mid-2021. Because that's how much time they have to survive with what I'm seeing as plans to try to keep us running. Inventory numbers. Let's jump in there, right? Total inventory, 1.5 million units, up 2.7% from February, but down 10.2% from last year. So interesting tale of two cities. Looks like the inventory is down. A lot of folks are pulling their houses off the market. Makes a lot of sense. Either fearful for COVID or either fearful, hey, I can't sell in COVID. One of the two, or fearful, hey, I need the house now for shelter. And I don't want to move anywhere else right now. There's a lot of different factors. Very interesting that it's happening so fast. That's my thing. Just like the stock market crash, probably one of the quickest crashes in history. This is where we're at. Inventory's going. I hate to say that doesn't look good for the demand side if you don't have supply. So you may see houses continue to have the $280,000 value. All right. 3.4 to sell a home. Last year was 3.8. So that 3.4, 3.8. That's the typical life cycle of selling a home. Put it on a market, list it. 2 months later, it's gone. Right. So that's very, very important data for us to look at. As we look at it on charts, this is kind of how it flows. NAR provides this. Again, existing home sales percent change year over year, 8%. 8% variance from the previous month, so that's very interesting. And here's how it looks when you look at it from a Pareto, and you kind of see existing home sales percentage. You definitely don't want to be in this range, right? Negative 0.8, but hey, 0.8 doesn't look as good as where it was headed, and we're entering the hot season. But with that said, it's kind of funky though, right? It's kind of funky because look at last year. They say this is the hot season for sales. It's already May. Let's call it May. They were under, right? So you had sales under, and then July, it looks like it started picking up more so in December than it did in the previous month. So very interesting. These are usually the hot months for April through about, I would say, August, right? Kids are out of school, or kids are going to be out of school, and parents can hunt, teachers, all that good stuff. They got the big long vacations and 2 months off. I usually should see a spike in this area, but the trends have been changing, and the market indicators have been changing. That's why it's such a market where everyone's trying to get in the news and figure out what the heck's going on. You gotta be close to the news. You gotta see where your local market is. Here goes a spread out between who's buying what. Okay, so market conditions, you can kind of see it. March 20th and March 19th. How many first-time home buyers? Not that much of a variance. It's not telling me a story like we're in a pandemic, I hate to tell you. More first-time home buyers now than there were last year. Sales to investors. Looks like investors are stepping out. Remember, those are the smart guys that live this market. They understand what's happening in the dynamics. So when they start pulling out, you got to ask the question. So that's one number that keys out to me. Cash sales, hey, you're nearly even. You're nearly the same. Still the same amount of cash sales available. And again, this is data that's reflected out of the MLS and sales that are taxable. And I know everything's taxable. However, there are some underneath deals that some people don't see that wholesalers can pull off. Distressed property. Here we go. 3 for 3. Okay, so same deal, not much there, not much change. Where are sales happening at, right? It is the South, by a long shot. They have the cheaper prices. I live down here myself in Florida. This is going to be the hotbed. I'm sorry for California. The regulations, the taxes, it's too much, and I think it's going to be an exodus there. I really feel sorry for California. People are leaving in droves. Okay, housing supply, we talked about it. 3 months is great, right? If you're in that 3 month range, and we got it, all right? We got it. Almost 3.25 at 3.4 this month. So, hey, steady as she goes for the single family guys, right? When we look at the national supply in the same range, and then condos obviously always are a little bit higher. Condos are tougher to sell and much easier to rent. So that's the other part of it you got to look at. Sales by price. What are the type of ranges that these homes are selling at? 250 to 500, right? That's the range. And if you're in that 100, 250, I think these are the brackets we need to look to in the market. What's going to happen if there is a recession? How hard will these guys get hit? Because these are pretty affordable, and looks like people are all the middle class. Excuse me, all the folks spending power wants to be in these ranges. When we look at 570 to 500, 750, 10% down. All right, 10% down. Let me get a little drink of water here. 750 to a million, really small, 3%, and then 3% for the million, and then 0 to 100. It's low because you can't find it. At the end of the day, that's the point there. 0 to 100, not that many homes available in that price range. All right, percentage change in sales from a year ago by price range. Big increase actually. So from 250 to 500, a big increase in sales. Believe it or not, more sales in the 500, 750. Hey, YouTubers are getting rich. Maybe there's something going there. And then boom, almost a contradiction to what I just said earlier. Looks like there's big sales in these ranges from 250 to about a million. you're sitting happy. All right, you're sitting happy. And then as we look at the percentage change from sales from a year ago by price range, the reason why they're not down here anymore because inflation has probably pushed them up into that 250 range. So you can't even find a house. Hence why they talk about these deflationary impacts that are needed to bring it down. All right, so we hit our first topic on the home sales and gave you a quick news update. Not quick, a long news update. I want to get into the oil cash, but I may skip around because we're still talking about home loans. Why don't we talk about this Fannie Freddie deal, right? It is probably the biggest talk of the block right now. Fannie and Freddie, they said they're going to buy some of these mortgages, huh? What is the deal behind that? Now, Housing Wire is, as I mentioned, one of my favorite websites, right? And what they're saying, there's more to the story with the forbearance. So let's just do this real time. I am here. I could go here, but it's going to block me. Okay. So I'm going to go further up and get the detail. Let's go back. Housing Wire. Boom. Okay, look at that. Forbearance, 5.95%. So people are taking that forbearance money, right? Banks can now postpone appraisals up to 120 days after mortgage closes. That's scary, right? After we did the bank data yesterday. So now, how are we helping? Because right now we're losing, right? With those two things. Hey, forbearance is up. Hey, I need help. 4 months, push me out. If I buy a house, they're going to check on me all the way through, maybe 120 days out as well. So very interesting. Loan scores have increased, right? JP Morgan 700 credit score you need, 20% down. These are all things that are changing. How are they helping the consumer out there that's trying to get in? And here goes again. Fannie and Freddie will begin buying some mortgages. Okay, that is the brand new play that I saw, and I was like, man, that is interesting. What do you mean Fannie and Freddie are going to buy mortgages? I mean, are they going to start being homeowners or what's happening? There's a little bit more detail in this, right? Buy mortgages. So this is what I would do in a search for all you guys to say, how do you get this information? And this is exactly what I would do real time. And what's interesting is all of the stops that are being pulled out. It's interesting, right? It's interesting that all the stops. So we went to Wall Street Journal, and here goes another one. You know, that's why I like Market Watch. Everybody's paid for. We're doing. Everyone's trying to get this ad money, guys. I mean, it's all over the place. So here goes Fannie and Freddie, right? They're allowed to purchase home only in forbearance. Okay, so that's the key catalyst. And obviously, forbearance leads to maybe a default mortgage. So that's kind of where they're leading into to try to protect themselves from that fall. You got to remember that governments also have a problem, right? If prices go down with all the debt that we're supposedly racking up that's not driving the inflation as of yet, that's why folks are talking about Bitcoin and other different types of currencies to protect yourself, gold, silver, etc. They have to get tax revenue. And despite what people say on a crash, I highly doubt that they want a high crash. Now, I don't have that many properties to be on the side of, I don't want to see my, you just believe in the whim that this is going to stay up. The numbers tell us something has to happen due to the amount of layoffs that are out there, okay? But that said, how bad and drastic is going to be when you have all that debt? You know, how bad is it really going to be? So now they're stepping in with this. Services are now required to offer forbearance to millions of homeowners. Required by law. Required by law. So this is not a catch-22 where you can say yay or nay. This is what it is. This is what it is. All right? And on top of that, to help the servicer, they're saying Fannie and Freddie will back you up. We'll help you out here. Help me out, For mortgage servicers can now plan for exactly how long they will need to advance principal and interest payments on loans for which borrowers have not made their monthly payment. For forecasting this COVID the last 4 months, it's going to last 4 months. So great information into the housing market, and it makes it even more complicated Again, there may be a drop, but all these folks looking for 60, 70% drops. I don't know. I don't know right now with this data that we just got. So we went over that, and what's skipped over from Fannie and Freddie. We're going to jump into the oil crash. Now, oil crash, all this is, it was probably one of the biggest crashes in history. One statement that took it from me, and I think we should adopt, is the pandemic has reduced global demand for oil by 29 million barrels. Okay? A year ago it was at 100 million. We're all at home, no one's driving. Simple as that. No one wants to buy oil. They're just getting stored, so it's your house getting filled up with a bunch of Amazon boxes, and suddenly you're at the door and there's no more space to put your Amazon boxes that have come in. You're like, man, I can't take another delivery. And they're saying, well, you got to take it. Well, I can't take it. And that's the argument that happened between the markets of buyers and sellers on the oil side for the May contract, which caused the implosion in the market, stating, hey, no one wants to buy these. Well, they're going to go in default and go negative, and that's what happened yesterday. They since have bounced back. They're up to the 14% range for the WTI crude, so it's interesting to see how that will play out. A lot of folks say we're backed by the petrodollar. Got to see what that really means as oil rests in a loomy place that no one thought it would be at, but it makes sense based upon the COVID. The last topic, the SBA loan. All right, that's a big deal for a lot of folks, and a lot of folks are asking, what's going to happen with this injury disaster, because we just lost our opportunity to get some money for our small business. Well, the government has stated, and you've probably seen it on several other channels, that they're going to come back in and help out. All right, and that law, I believe, is going to be passed, if it hasn't been passed already, for the SBA to allow for some additional funding, and you can go on the SBA.gov or to your local lender to apply for this loan. What is the detail? I shouldn't be saying this, but it is what it is. Trying to help out. 10,000 of that is not required to be paid back, so you can get off 10,000 if you on the economic injury disaster loan emergency fund, and not have to pay it back. But small businesses also have to meet certain criteria and requirements. If we look at some of the eligibilities, and this is the one you want for sole proprietors and low LLCs. And again, I'm not a financial advisor or an advisor. I'm just reading the statement from the website, right? The program is for any small business with less than 500 employees, including sole proprietors, independent contractors, and self-employed persons. So that's mostly the realm of what I see for a lot of small business owners, especially YouTubers. They're going to fall in this bucket, and they can ask for, again, some type of relief due to the issues we've been having with the COVID arena and the layoff. So very interesting day. I pulled a lot of stats. I'm just going to go through one more piece of data. What is the impact on real estate of COVID right now? 171,000 per on COVID, right? So that's huge. The real estate industry accounts for $648 billion of the gross domestic product, GDP, of California. That's almost 20%. Again, I'm just showing you more reasons why they don't want more real estate to go down. Let's look at another state. Florida, 22% of it is real estate. 77,000 per impact. 285 billion. Texas, 15%. But they're going to have a big oil crisis. I think they're going to be worse off than a lot of other companies with this almost $0 oil in one day, and now at $14. I think we're going to see big changes in big old Texas and possibly some layoffs. So I hate to say that, but I see that coming. They may be impacted more than any other state if energy prices stay at what they are. New York City, the epicenter of the Corona crash, 92,000. Okay, impact 301 billion, 17% of their GDP. So again, all these are important marks above 15%. If we were to take a hit here, it is most certainly gonna be a hit to the market, as they're so dependent on it for revenue streams in various ways from the real estate department. So this is Mike. I'm gonna leave my notes. My link of my email below. Give a shout to Build This City 23 at Gmail if you want additional information, and please like and subscribe this video. Some days I just give you information. This is one of those days, and some days I give you a solution. This is just one of those information days where we try to digest what's on the market and understand what our next steps may be. Build This City 23, Mikey B. I'm signing off. Subscribe, like, and share. Thanks.